Hey, everybody, it's Pete Carmasino. Thanks for joining me on this week's halftime show here on StockCharts TV. We appreciate you tuning in each and every week, and we like doing it as well, bringing out some new ideas and some things we're seeing out here in the market. So today we're going to focus on small caps. We're going to look at a lot of different things, but we're also going to look at commodities. I have sort of a broad-based view of just a few industrial commodities, but there's plenty of other commodities out there to look at, especially on the agricultural side. We're just seeing prices pull in, and I think that's really what the whole idea of controlling inflation is about. The Fed is on tap this week, so a lot going on. So let's dive into just some notes. We're going to look at some charts, and then we will close it out with just some closing remarks. All right, let's take a look and see what we see. Okay, just a quick market overview, and I am going to be quick, so I apologize, but you guys are on video, so you can pause and take a look when you want. Federal Reserve is obviously the focus this week. We're looking for 75 basis points. We've seen a lot of things change here in the markets in the recent days. Markets have got a little bit more active, taking on more risk, feeling a little bit more comfortable. A lot of money flowing in from new areas, mainly the commodity trading advisors, CTAs, you know them as. And obviously, we got some corporate buybacks coming back too. So that could actually add to some inflows, which could support the market. Now, the interesting part about both of those things is there's no guarantee they're going to come in at the opportune time. But the fact is that corporate buybacks are out of their blackout period, and CTAs are trend followers by nature. So if they start to see levels like the 4,000 or 4,100 start to be removed as resistance, where the markets can get above them, we're going to see more funds flow in. And it's to the tune between $5.5 to $11 billion potentially per day. Okay, just again, a lot of factors in there. It's not a guarantee, but it's out there on the sidelines to be aware of. So got a lot of names this week, all the FANG names. You got Apple and Microsoft coming in this week. The high-profile themes have not gone away. We still see the inflation, the peak inflation, strong dollar, which could become earnings headwinds, a lot going on. And again, those positives that exist are the buybacks and the CTAs maybe coming in from the trend following levels. So we'll go on to the next chart here and take a look at just the calendar real quick. A lot of economic news, including the Fed. All right, so you got the Fed on Wednesday. We're going to hear from them around 2:30 in the afternoon. But look what's happening Tuesday, Wednesday, Thursday, Friday. A lot going on. So this is a Super Bowl of not only earnings, but also Fed news, interest rate hikes. Certainly going to be talking about the dollar. Definitely going to be looking at overseas issues, whether it's natural gas, the war in Ukraine, or ECB raising rates too much. So there you go. You got a lot on tap here, and that's not going to change anytime soon. Next one is our weekly chart. I like to look at the bullish percent. We start to look at different rallies. I'm counting this as 3 on a weekly basis. Again, a lot of people are looking at different levels. I'm looking at weekly, but I'm seeing bullish percent get better, and that's obviously something that is a positive for the markets. Just looking at crude, again, this is our commodities kind of overview real quick. Sitting around that 200-day level, I'm looking at a live quote right now at around 96.33. It's up about 1 3/4% today, still under 100, but above that 200-day moving average, which is really important. Natural gas had a massive pullback and then a bounce again. So right now, trading at 8.66 on the futures market, again, sitting right around 820 on the close from Friday. So we're up close to actually over 4% right now on this particular commodity. So it's rebounding. We didn't think it was going to stop moving higher. There's a lot of speculation and a lot of activity and volatility for sure. The 24th closing level for the 10-year rate was right around 3 and 13. It was over 3. That's the point. A month later, we see it under 3. And what are we seeing? Bonds rallying. Why are bonds rallying? Well, at some point they become a risk-off area. They can become a parking lot for trades that are happening that might want to feel a little bit more safe. Maybe again a risk-off situation, but also maybe those yields can't be ignored at these levels. So you got to take a look at that. S&P from the 15th of July was just above our target of 3750, and look what it did in the last week. It rallied big. And I think we're probably going to see a continuation of that, again, up to the 4,000 level. We just don't know. And here's copper. Again, an industrial metal selling off big time. You're seeing demand destruction. Obviously, inflation is going to be, helped to be reduced because of this. Prices down on a lot of different things. That's where this comes from. Lumber, the same chart almost, maybe even a little bit more dramatic. And obviously silver, which is kind of a precious / industrial metal as well, but a big sell-off nonetheless. Okay, let's take a look at some small caps and see what we see. All right, as many of you know, we like to chart, obviously looking at both of our charts here on Chaikin and obviously the ACP platform, as well. And I'm kind of looking at just some recent developments in the small cap area that have kind of shown some sprouts of bullish opportunity here. So when I start to look at, let's just pull up IWM. It's a very popular ETF. It's one that I have here up on the charts, looking at it relative to the SPY. And what am I seeing? I'm actually seeing some green kind of bullish indicators here. We know it's a massive ETF. It's got $69 billion of assets in it. It trades pretty heavily. The expenses aren't that bad. They're a little expensive, but they're 0.19%, almost 20 basis points roughly, and a dividend yield of 1.25. Obviously, that's a component of lower price. The dividend's going to go up. But if I look at it relative to the S&P, we are getting a bottom kind of forming here. Definitely sideways action. Again, I shouldn't even use the word bottom, but I did. But my point being is it's forming a bit of a pause in its downward trend. If I squeeze this chart a little bit further, you can see the volatility, but sitting around this level, which I've drawn as sort of support and resistance, which is about a 0.4. If you want to do the ratio chart, it's easy to do. IWM : SPY. You'll build the same chart. You can add all the indicators you want on the ACP platform. Pretty simple. But I'm seeing RSI break higher, which I think is certainly signaling a potential move to that area of resistance, which again, if it's broken on the upside in a significant way, will become support. Where are we going to get that from? I don't know exactly, but my point is that the trend is materializing. And if we get the Fed pausing a little bit, if it becomes a little bit more dovish or a little less hawkish, or does 75 basis points and says we've seen a lot of impact from what we've done already, demand destruction, whatever the case may be, housing prices coming down, lumber, copper, we talked about all of that. And I think that's going to start to materialize into a little bit more activity into the funds. Now, again, we don't know. We don't want to see any surprises, certainly from the Fed. I don't think Jerome Powell is on target to do anything like that, but we don't know for sure. So we just got to stay nimble and stay careful. But anyway, this is materializing. What I did was I just went through and I started to look at small cap growth. Okay. So small cap growth is starting to break out. And there's a bunch of names in here. Now, I don't know each and every one of these ETFs by heart, but I've opened our system to just take a look at the dividend yield, the expense ratio, and potential assets. Now, these assets change and our data can be lagging a little bit. They may not be 100% accurate. Just got to be careful of what we're talking about here. But again, that's part of the deal in this business. So we've got to make sure we see what we see here and then kind of quantify it and certainly verify it. Now, a relative strength change here on this particular one is pretty interesting. I got a bullish rating all the way across, and I've got this $50 level really acting as the area where the trend line is sitting, and the upper band, these are our volatility bands. It's kind of overbought, right? Even our overbought signal down here is kind of sitting there. Again, one to look at. You can dive into the ETF and see if there's any stocks setting up, which we'll do on a couple in a few minutes here. But I just want to point out a few names. A lot of similar setups here. Again, another one, the Spider S&P 600 Small Cap Growth ETF. A lot of assets in here, $2.5 billion roughly. Better yield, lower expense, but again, getting up against that area of resistance. And so even though I'm seeing bullish sprouts here, I've seen this before in the past, back in November. We didn't see it much here. We did see it here back in June. And so they just haven't gotten any traction. I think the traction, the catalyst can be a more dovish Fed. We just don't know. But I think that's what a lot of people are kind of trading on at this particular point. Again, it's all speculation, but it's something that is materializing. You can't ignore it. IJT is the other one. iShares Small Cap 600, very similar situation, about the same is expense ratios, but less assets, about $6.5 billion and less yield. And the last one is obviously the Russell IWO, Russell 2000 Small Cap Growth. Again, Small Cap Growth, a pretty significant move down, right? From 320 down to right around 195 or so. That's pretty heavy downdraft here. So if you stayed with this, I hope you're okay. If you haven't and you moved out, this could be an opportunity to start maybe dollar cost averaging and just kind of take a look and see what you see as far as the trends. Now, you may want to not take any action before the Fed because, again, it's overbought. Even though our overbought, oversold signal is kind of in the middle here, I'm calling it overbought because it's right above, right near the trend line and right at those top of those volatility bands. So you just have to be careful. Okay, just have to be careful. As aggressive as you may want to be, you just take it in stride. If you don't use, assets that you can't afford to lose, that's a different story. But from a longer term perspective, things are starting to again form a bottom. It's done it before. We've seen the head fake before between February and April. All right. We don't want to get head faked again. But my point is that the catalyst is yet to be seen. All right. Once the catalyst does reveal itself, maybe these will break out, but typically they'll pull back. On that situation, it's a better opportunity for you and for your money. Right. So that's kind of what you want to pay attention to. The other area of small cap, all right, is healthcare. And here's an interesting ETF, PSCH. All right. It's the Invesco S&P Small Cap Healthcare ETF. All right. I pull up the chart here. I can see a much better relative strength formation. Definitely riding the top of the band. So it's still kind of overbought, even though our signal is not showing that. But look at my setup here. Again, a lot less assets here. Don't know exactly the trading level. It doesn't trade a lot. But let's look inside of the ETF because there we might find some names that could be potentially setting up for just some different types of moves on the up or the downside. So there's a lot of names in here. There's no doubt about it, right? You've got 31 bulls, 34 neutral by our standards, and 15 bears inside of here. Okay, so here's a big name that we know, AMNL Healthcare. It's about a $5 billion stock with a 13 PE. It's expensive, but look at the relative strength. Okay, very volatile. Nobody said these aren't volatile. Be careful. But you can see this one in particular likes to move around pretty healthy on certain days. Obviously, announcements are coming out. You can get a little information on this, is what I always recommend that you do, and just take a look and see if there's anything that's standing out here that could be interesting. I'm just randomly picking some names. Here's a biotech name. It's a very small cap name with a decent PE, very good rating. Again, these breakouts are occurring, but they're all overbought. Do not chase. Do not chase here because you could get caught holding the bag on the wrong names. You just want to be very careful. But I'm pointing these out so you can just see, right, what some of the names are doing, how they're reacting, what's happening out there in the markets. And again, when I go back to IWM, that bigger small cap, that Russell 2000 ETF, looking at the SPY relative to the SPY, you are seeing some signs. Again, very few. You got to squint to see them, but they exist. Very subtle signs of small caps getting a bit of attention here, again, for a particular catalyst that might be coming soon. Again, I want to point out that I am on Twitter. You can certainly follow me on Twitter. It's very easy to do. It's at Carmasino. There's my profile there. Just shared some pictures of some recent stuff. But we talk about stocks on here as well, and we put up some different things that are happening. So follow me on Twitter just for some insights on the interim between week to week and day to day. All right, everybody, that's all the time we have here on today's halftime show at StockCharts TV. We appreciate you tuning in, and certainly put in some comments. Let me know what you think. If there's anything else you'd like to hear or see, just let us know. And as we sign off, we're just seeing markets right around the same level, kind of unchanged. And I think we're just in a wait and see mode this week. It's a busy one. And again, the Super Bowl of earnings and Fed and all types of things happening. It's going to be busy. Take care and be careful. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.